Yo, 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 what is the dealio, y'all? Hey, listen, check this out. In this video, we're going to be talking about price targets, all right? How to set your price targets and how to also know what your price targets are. Because a lot of times you may get in a trade and you may not know when you should get out, right? You may not know when should I get out? What should I be looking for on the charts that lets me know when I should get out or if I should stay in, okay? So we're going to be talking about all of that today. All right. Now, when we're talking about price targets, first things first is you got to understand what your entry is. Okay. What's your entry? And then also, where are you at in your entry in relevance to the actual levels? Okay. Now, your levels could be an EMA, could be Bollinger Bands, or it could be support and resistance. It just depends on whatever you're trading. Okay. But I have a few scenarios and we're going to go in the charts and we're going to break down what your price target should be. Now, me personally, I like to use EMAs as price targets. Okay. Those are EMAs and a VWAP are going to be a lot of my price targets, and also fair value gaps are going to be my price targets as well. That's what lets me know if I should get in or if I should stay out. Now, also, what I will say is sometimes even if you are expecting a big move or you're anticipating a big move to the upside or to the downside, let's say you got $1.20, $1.50 move that you're expecting. You can get out halfway through the move and be happy with your profits and call it a day, right? I never want to try to stay in for the whole move because you never know if that whole move is actually going to happen. All right. So that's something I want to say is I never try to stay in and hold out for the whole move. I don't care if it looks perfect. I'm gonna probably get out, or I'll sell a majority of my position and then I'll sell my runner, or I'll have runners, maybe one or two extra contracts depending on how large I went in that position, and then go from there. All right. So it doesn't matter if it's a reversal, if it's a breakout, whatever it is, right? I'm going to go in the charts and I'm going to show you some different ways that you can look at your price targets. All right. So let's go to the charts and let's get into it. Now, so right here, the market is still open. So let's say Google, right? So let's say Google. Now, let's say I wanted to get in on Google right here, right? Let's say I wanted to get in on Google right here. And let's say I entered in right here. My price target, if it was a scalp trade, right? If it was a scalp trade, let me write this down for you, because you got scalp trade and a day trade, okay? So if I'm going to scalp trade this, I'm going to say price target, and you could also look at this as like take profit, right? So on a scalp trade, my price target would be somewhere around here. Okay, these EMAs right here. All right, these EMAs right here, because it's going to come and test this level right here, right? Now, if it comes down and it breaks below this, then we can say, all right, it could come even lower, right? And if it comes down to the VWAP, that's even a better target, right? But right here, we have a fair value gap that is that's marked up, right? So let's say you I want to day trade Google, okay? Let's say you I want to day trade Google, right? What I would do is day trade price target, okay? My day trade price target would be this fair value gap right here. That would be my day trade price target, right? And the reason is because it has to come back to this this gap right here to get some liquidity and to also test. Now, this looks like a very good reversal right here, a very bearish setup right here, because it came up to resistance up here. It rejected off, and then it's starting to come down, right? So it may fake you out a little bit here and there. It may take a little bit of time, but I definitely think that just with where we're at right now with Google right here is going to be coming down. It's going to come down here. It's going to test. It'll bounce up and down a little bit, and then it'll end up coming down to the VWAP. And once it closes below the VWAP and the 50 EMA, then it could come down right here. All right. So that would be my price target on a day trade. It would be right here. And if I was scalping, it would be right here. Right. Now, let's just say, let's go to Alibaba. Right. This is another reversal. Right. Kind of similar setup right here. Right. This is on an hourly time frame. So it came up to resistance right here. And then it rejected, opened up, tried to go up, didn't, came down. Right. Now, let's go to the 15-minute. Let's say I'm scalping this one. If I was scalping this one, then, and let's say I entered in after this candle right here, and let's say I entered in right here, okay? So let's say on a scalp trade. Scalp trade, all right, price, all right. Scalp trade price target. So if I entered in where I said like around here, then I would be looking for it to, on a scalp, I would be looking for it to come down here simply because this is a fair value gap, right? You see how I put that right there? We got the fair value gap right here. Okay. So because this is a fair value gap, it's going to come down. And so I definitely, I don't want to say I'm expecting it to, but that's what I would be looking for it to do, right? It may do it in a couple minutes. It may do it in a couple hours, but at some point in time, it's going to come back down here because this is just how the technicals work, right? And then you see the setup too. If you look at like the 30-minute, it had this big candle right here. It ran up and ran up some more, got rejected, boom, right? So this one got rejected again, and then it started to come down. So this would be my price target right here if I'm scalping, all right? If I was day trading, I would sit here and say I would stay in a trade if it breaks the fair value gap to the downside, because I know then it's probably going to end up coming back down to support, all right? So this right here is support on the day. Right here, you could say here, right? So right here to right here is support. So between 127.87 and also 127.50, okay? So this is a low of day, and then this is the next low of day. So we could say this is support. And then right here was the pre-market's resistance. It did not break above it. It tried to, but it rejected off of a higher level. So this would be the resistance right here, right? This would be the resistance right here. Okay. So if I get in at resistance and I'm scalping, I'm going to say, okay, I'll write it back down to the 9 EMA, right? Or if it's or if you get in right here at the 9 EMA and the VWAP and you're writing it down, I'll say, okay, I'll write it down to the 21 EMA, right? If you get in right here and it rejects off the 21 EMA, then I'll say, okay, I'll get in down to the 50 EMA, right? That is how I would do my price targets on that right there, right? But if it's a day trade and I see it rejecting off of resistance, I may say, okay, where's my support at? My support is for the day is at about 127.52, right? So I'll say, okay, I'm going to take my profits around, let's just say 128 to be just to be modest, right? So I would set a limit order. So I'm in at 129.25, and once it gets down to 128, I'm going to take my profits. You see what I'm saying? And set a limit order for that, and then it could trigger, or you could set a stop limit order and just keep riding it down until you're happy. And then whenever let's say you set a stop limit order for -5%, and it's riding down, and then whenever it retraces 5%, it'll stop you out in the profit. Okay. Now let's say let's go to a different stock. Let's say I wanted to trade Nvidia. Okay, so let's say a reversal from the downside. Let's look at Palantir. All right, so let's say we're on the 15-minute, and you're like, okay, I see a reversal right here, right? And let's say you want to enter in on this candle right here because you see a reversal. My profit target right here would be these EMAs right here and the VWAP. You see how the EMAs and the VWAP are right there? So I would write it up from here, 106.99 to 109.01. And that $2 move or that $1.50 move right there, that is a big move. And that could definitely get you paid right there. And as you can see right here, how it rejected, right? Y'all see how on this candle right here, it rejected off of the VWAP and the 9 EMA, and then it kept coming a little bit lower. Rejected off EMA and VWAP. Right? So yeah, so it came down here, it found a bottom, it found support for the day. So we're gonna say support, daily support. Okay, right here. And then it started to reverse. And then so you could enter in here. And then I would say I would take profits right around here. All right. That would be my profit target or my price target. Okay. Because you don't know if it's going to break through these EMAs right here. You do not know if it's going to break through the EMAs right here. Stocks are always going to test at these EMAs right here. So we got the 9 EMA, we got the VWAP, we got the 21 EMA, we got the 50 EMA right here, and then we got that 200 EMA right here, right? So these EMAs I like to use as my price targets, and they're like testing grounds, right? Because what if you have a price target of right here, right? Let's say you're like, oh, I'm going to wait for it to test high of days. Okay, that's fine. That could be your price target, but look what happens. It never got there, right? So you want to have multiple price targets. And so I like to use the EMAs as my price targets, the EMAs and then the VWAP, right? The EMAs and the VWAP is how I like to use my price targets. So you can say, all right, I'm getting in right here. I'm gonna write it up to the EMA, let it test. If I see it start to reject off of it testing, I'm gonna get out and I'm gonna take my profits and secure my profits. Boom, right? You can do it that way. If you get in at the EMAs to the downside, you can say, okay, I'm going to write it down and see if it comes and tests this low of day right here. That's another way you can do it, right? It does just depend. So if you have a low of day or a trend line, you can say, all right, I'm going to see if it's going to come down here. And if it doesn't, then you can just get out a little bit lower. If you start to see it reverse above the low of days right there, then you know that it's in like a semi uptrend. And then you can get out right there and then boom, right? So it doesn't matter what the stock is. If we go to Shopify, I wouldn't really trade this one right here. It's in a downtrend. So you could like get in right here and just write it down to a new low, right? A lower low right there. If you like, let's say you got in right here at the rejection of the 21, you could write it down to the low of day right there. But it's been in a downtrend all day. But it's kind of like a little bit ugly of a chart. You know what I'm saying? Just gonna keep it real. All right. And then let's say we go to Meta. This one I would not trade. This is not a good chart to trade. Let's say I went to HIMS. Okay, boom. So we go to HIMS right here, right? So it opened up and then it blasted off, right? All right. So let's see what happens. It blasted off on the day. Let's go to the 5-minute real quick. So on the 5-minute time frame, watch how this works. We got this rectangle right here, and then boom, right? We got a little gap right there, boom, right? And then we go to the 15-minute time frame. Perfect, right? So as you can see on the 5-minute time frame, it let us know that it was looking to potentially reverse right here. So let's say you got in right here at this level right here, and you took an entry right here. Then my price target on a scalp trade would be right up in here in this box. And as you can see, it came right down here, and then it bounced off and it went to the upside. All right. So I would say scalp trade price target. Okay. And then it would be the fair value gap, like inside fair value gap. All right. And then we would do that, make that go, and then boom. All right. And it did just that. All right. And if we look on a 15-minute time frame, it did just that, right? So you could have got in right here on the 15-minute If you saw the indication on the 5 minute and then wrote it down, if you had the fair value gap marked out, boom, you could have wrote it down right there, and then you could have been good to go. All right, it bounced off and it went to the upside, but this would have been my price target right there. And as you can see on the 15, it came close to the 9 EMA right there. All right, if we go to the 5 minute, it came down to the VWAP, and then it came down to the 9 EMA, and then it ended up bouncing off and going to the upside, right? So that is how I would play that one right there. All right, so like I always say, it doesn't matter the stock. It just matters about the actual the patterns that we're looking at, right? So that's how I like to look at it. Is I like to use the EMAs and the VWAP as price targets, if you will, even if I think that it could make a bigger move. I like to take profits halfway through the move or even 30% through the move, because I always remind myself that trading is a privilege, right? And you don't want to be greedy. You want to be able to balance out your fear and your greed, right? So being able to balance out fear and greed will definitely do wonders for you. So yeah, so that's how I like to do my my price targets when I'm trading, scalping, and then day trading. All right. So like I always say, make sure you get out of your head, go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm gonna see you guys on the next video. Peace.